Meerkat here with the weekend review, good through November the 6th, 2016. Hey, let's take a look at the broad markets here. Hey, by the way, D7 will be back in the country on Monday from Miramar, where he's been teaching an entrepreneurial course to a small businessman. And don't know if he'll be back in time for the video or not, but going to be a bit of jet lag there from being on the other side of the world. Let's take a look here at Friday's price action. Then let's take a look at the daily charts and then the weekly charts, since this is the weekend review. So let's take a look here at the numbers. S&P 500 down to 0.11. The Dow down to 0.22. We've got the Qs down at 0.35. Only one that ended into positive for Friday was this small caps, up 0.64. Bank also down 0.14, confirming the move in the S&P 500. Then we got the VIX up again, 1.9%, up to 22.5. For my video that you saw on Thursday night, that we are in high volatility, high fear area. And then we've got the gold and silver here. Gold up just a fraction, and silver up 0.2%. Oil down again, almost 1%. And then we've got the dollar also down 0.11%. It continues to fall. So we got oil falling, we got the dollar falling, we got the markets falling. Interesting. And let's take a look now at the daily charts, and then we'll go to the weekly charts, since we can pull back and look a little bit. Here it is, the S&P here, down 9 days in a row now. That hasn't happened since 1980, where we've had 9 consecutive days down. Where did it stop? It actually tagged the 200 moving average there, big red, and then pulled up a little bit. But look, during the day it was way up here and then pulled all the way back down at the end of the day. That's not a good sign. Then we have the Dow Jones Industrials here with a symmetrical triangle. Bam, 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 bam. We're still moving down there, getting close to that 200 moving average. How about the NASDAQ here? Look at that. Second out of 8 days in a row. And it is down here again. Look at it. It was way up here, pulled all the way back down. I don't know if it's going to turn around here or not. And then we've got the small cap Russell here. Bam, 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 bam. Again, came close to the 200 moving average, and again it was way up here during the day, pulled back, and it did end up in a positive though for the small cap Russells. Now, what's causing all this? Well, the S&P was down 1.9% for the week. The NASDAQ down at 2.8% for the week. Oil down 9.5% for the week. Let's pull back and look at the weekly chart for the SPY here. We were in a rising wedge. We called it short when it closed below that lower support line. We called to go short the market, and sure enough, bam-de-bam bam, and then ka-bam, down 1.9% on the S&P this week. That's pretty darn strong. In fact, it's the biggest candle we've had since back here in June to the downside. And look at what happened in June. We had 1, 2, 3 weeks down, and then what happened? Ka-boom, back up. Could happen again this week. Why? The elections. We've had a lot of uncertainty in the politics here, and that has added to this downward trend. Plus oil is down, plus earnings have been off. Either the earnings themselves have not met expectations, or the outlook has been disappointing. So that has driven it down here. Are we oversold? Could be. It could bounce back real big here, depending on the outcome of the election, and also additional earnings that will be coming up this week. Let's look at the Dow here. It was in a symmetrical triangle. Can't really call it a descending triangle because this one's rising slightly, but look at that, ka-bam, right down there, really down. And then we've got the NASDAQ here, was also in a rising wedge, went sideways for a while, and then ka-bam, NASDAQ down 2.8% this week alone. That's pretty darn strong fall, and look at the volume, increased volume. Then we had the small cap Russell that was here in a rising wedge, and then it started to fall. It was down 2% this week. Came off its lows there on Friday, but boy, it was pretty darn strong fall. Now closed below the 100 moving average. And let's take a look here at Bank for the weekly. It's still high basing up here in this tight range, so it hasn't been as nearly as bearish as the rest of the markets. That's a more bullish sign. And then the VIX. Oh my goodness gracious. On the weekly chart here, look at that. The VIX is up here above that threshold, and we are now in high volatility, high fear markets here. Again, it's over uncertainty in the political arena. They thought that Hillary was pretty comfortable lead. Now it's just unknown. The market, it doesn't really care which candidate wins. It's more the uncertainty here. They're not sure exactly how to play it. So that's it for the weekend review. Just remember that there is a lot of uncertainty in the market, that being in all cash is an okay position until after the election here on Tuesday here in the U.S. And that, or have your shorts on. And even if you have your shorts on, you better have those stops in place. And I would definitely hedge over Tuesday's results, whether you're long or you're short. This is the Meerkat. Trade well.